US tariff shock puts India's textile and garment exports under severe strain. India's textile and garment industry is going through a very difficult time, and this pressure is coming mainly from one place, the United States. New tariff threats are adding to an already heavy burden, and for many exporters, the situation is becoming hard to manage. The biggest concern is a new proposal supported by US President Donald Trump. The Senate bill could allow tariffs of up to 500% on countries that continue buying Russian oil. If that happens, it could be added on top of the existing 50% duty already placed on Indian goods. For many in the industry, that could make exports to the US almost impossible, and that is serious, because the US buys around 30% of Indians' garment exports. Key production hubs like Tirupur, Karur, and the NCR Panipat belt are already feeling the strain. Small and medium factories are the most vulnerable. Many of them are working on thin margins. To survive the current 50% tariff, exporters have been lowering prices and sharing costs with buyers. In many cases, they're absorbing part of the duty themselves. Profits have fallen sharply, and this cannot continue for long. Some factories are already facing working capital pressure. If tariffs rise further, closures and job losses could follow. Buyer behavior is also changing. Recent data shows India's textile exports to the US have fallen. At the same time, Bangladesh and Vietnam have seen growth. American buyers are shifting orders to countries with less policy risk, and they're reluctant to absorb the full tariff cost. This uncertainty is slowing down new bookings and future orders. Large exporters are trying to reduce risk by setting up factories in other countries, but smaller farms cannot easily do that. Rebuilding supply chain takes time and money. The issue is also tied to geopolitics. Many of the US tariffs are linked to India's purchase of discounted Russian oil. India relies on that oil to keep energy prices stable. Completely stopping those imports could raise costs at home. At the same time, legal uncertainty in Washington adds more confusion. Even now, Indian goods already face high cumulative duties. Exporters are making decisions without clear policy direction. On the larger scale, India's economy remains strong. The United Nations expects growth of over 7% this fiscal year. Domestic demand and public investment are supporting the economy, but long-term tariffs could slowly hurt exports, and markets like Europe or the Middle East cannot fully replace US demand. Industry leaders say government support is essential. Easier credit, stable policies, and access to affordable raw materials will help. Without clarity on US trade policy, India risks losing market share. And once buyers shift sourcing, it is hard to win them back. For millions of workers and thousands of factories, this is no longer just a trade debate. It is a daily business challenge, and the coming months will decide how strongly India's textile sector can hold its ground.